All right, welcome back, everybody. Today we're diving into an absolutely fascinating collision. We're talking about a traditional investing titan shifting his entire mindset, basically in real time. In this explainer, we're breaking down a recent, mind-bending exchange between legendary investor Howard Marks and entrepreneur Nikhil Kamath. And what makes this so incredibly compelling is that we're watching decades of hard-nosed financial history collide head-on with the bleeding-edge frontier of technology. So if you want to understand exactly how the smartest money in the room is adapting to unprecedented change, well, you are definitely in the right place. Let's get right into it. So we're going to jump right in with this brilliant opening metaphor from Kamath. He poses the classic investor's paradox, asking, where is the $10 bill nobody has picked up right now? You know that old finance joke, right? The one where an economist won't pick up a $10 bill on the sidewalk because, hey, if it were real, someone else would have already grabbed it. It's the efficient market hypothesis in a nutshell. But Kamath is basically asking Marks to look right past that perfectly efficient market and point out the massive, overlooked values sitting right in front of us today. And Marks' answer? It takes us to a completely unexpected place.
Now, if you follow finance, you know Howard Marks is famous for his deeply analytical, carefully considered memos. I mean, these things usually take him months to craft. But pay attention to the timeline here. He drops one on December 9th, and then boom, a rapid-fire follow-up on February 25th. Both of them entirely 100% focused on artificial intelligence. For a veteran market historian to move this quickly and write back-to-back foundational pieces, that is a massive, blinking red alert. Marks realized that AI isn't just, another passing tech cycle. It's a fundamental reshaping of productivity that could literally upend the very companies his traditional value investing framework relies on.
And this brings us to the crucial point. 3 simple words. I changed my mind. You guys, it is so incredibly rare for a legendary investor, someone who has built a literal multi-billion-dollar empire on established rock-solid principles, to openly admit to a massive, unexpected shift in perspective like this. When Kamath pointed out his pivot on AI, Marks didn't deflect, he didn't make excuses, he just owned it entirely. For a guy whose whole career is built on predicting market cycles using historical precedent, pivoting this hard toward a disruptive, unproven technological future is a massive, massive paradigm shift.
All right, moving right along to Section 1, the next 10 years.
I want you to really pause and consider this for a second. Think about your own industry, your career, your personal portfolio. Who is actually going to find the most success in the next 10 years? If you had to place a bet right now on who dominates the 2030s, what attributes are you looking for? Is it the person with the most capital, the one with the best historical data? Well, Marks completely strips away all those traditional answers and zeroes in on exactly one defining characteristic for the decade ahead.
His answer boils down to what we can call the AI imperative. And it's not just about casually knowing AI exists. It's about truly mastering 3 specific areas. First, you have to actually understand AI, getting past the marketing buzzwords to know how the mechanics under the hood function. Second, grasping its capabilities. That means knowing what the tech can actually execute today, separating the sci-fi fantasy from immediate practical tools. And third, and this is the absolute game changer, knowing its implications. That's the ultimate investor's edge, right? Foreseeing those second and third order effects, like what industries is this going to destroy, what totally new sectors is it going to create. Marks is definitively stating that the winners of the next 10 years are the ones who master this exact 3-part imperative.
Which brings us to Section 2, debt, equity, and history. So Kamath follows up with this classic foundational investor dilemma. He asks, if you had to start a brand new 40-year career today, which side are you taking? Debt or equity? I mean, this is the bedrock question of finance. Do you lend money for a safe fixed return, or do you buy ownership for a variable but potentially infinite return? Kamath throws this massive, structural question at Marks right after they just got done discussing the chaotic, unpredictable future of AI. It's such a brilliant conversational pivot, snapping us right back from the unknown future to the binary, hard reality of financial markets.
And what's wild is that Marks actually stops to consider this. He literally tells Kamath, my answer may take a while. He admits he hasn't been asked this question much lately, basically warning him to settle in. And I think that adds some serious weight to the foundation we're exploring here. When a market veteran who has literally seen it all needs to pause and actively process a question about debt versus equity in today's climate, yeah, that tells you the old rules might be undergoing a major stress test right now.
Okay, so let's talk about the baseline of the stock market, 10%. That is the average annual return for the S&P 500. In the world of equity investing, this is the magic number. Marks brings this up to anchor the whole conversation in reality. When you buy into the broad market, this is the historical expectation. It's basically the engine of modern wealth creation. But, a percentage by itself is really just a number. It only becomes a miracle when you apply the next variable.
Because the real magic happens when you pair that 10% return with a massive time horizon. 100 years. That is a staggering testament to compounding historical success. Marx is pointing out that for an entire century, we're talking through world wars, the Great Depression, the invention of the internet, global pandemics, the broad equity market has just stubbornly marched forward at an average of 10% a year. It is, without a doubt, one of the most remarkable wealth-generating engines in the history of human civilization.
And there's this great, really human moment behind this number. Marx catches Kamath just kind of casually nodding along to that incredible statistic, and he actually stops the conversation. He says, "I say 10% for 100 years and you nod? I don't think so. Run back the tape." He's calling out the fact that we've become completely desensitized to how spectacular and historically unique that century of growth actually is. We just accept it like it's gravity. But as Marx's recent pivot proves, past performance doesn't guarantee the future will look exactly the same. The landscape is shifting under our feet.
So here is the billion-dollar question I want to leave you with today. It's a real challenge. How do you balance the proven heavyweight of the past with the AI-driven future we just mapped out? Are you investing for that 100-year reality of 10% equity compounding? Or are you going to shift your mindset, just like Howard Marks did, to focus intensely on this new AI imperative, recognizing that the people who grasp its capabilities and its implications are going to be the ones who own the next 10 years? It's this ultimate tension between the gravity of history and the shock of the future. Really think about where you stand on that. Thanks for joining me for this explainer, and I'll catch you in the next one.